I'm Jarek, your host for today. And with liberation fatigue setting in, some valuations across the board seems to be quite stretched, and there's a bit of profit taking across the board for certain stocks as well. As company reported their results and some fatigue sets in. But last week there's a big event, so the Fed actually is now open to rate cuts. So that is actually a big surprise, which actually lifted the markets. And now rate seems to be good in favor, for some investors. First, for today, we will start on with Krishna on ST Engineering on why the downgrade, as well as this potential rate cut, how it can impact his sector or benefit his sector. Next, we'll move on to Amiru, our chart guy, who have two trading buys on Hong Kong as well as Namli Metals. And lastly, I will then share on my downgrade on StingPost, as well as why we remain bullish on Marco Polo Marine. So first, let's welcome Krishna. Krishna, thanks for coming on the show. First, I'll check with Krishna on what are the tariffs impact on ST Engineering.
Thank you, Jai. Thank you very much for having me on the show. So I think management has been very proactive in guiding to Street how this whole tariff thing is going to impact their results. So in May, after the first quarter results following the Liberation Day, management did guide that the business pillar which will be most impacted with tariff is the commercial aerospace segment. Management guided that about 40 million per month of deferred revenue for the segment because of this tariff-related impact, which equates to about 10% for the commercial aerospace revenue, about 4 to 5% of the group revenue. So it is not insignificant. But the good thing is that there are mitigating steps that management already has. For example, shifting or activating some of the capacities, hangars capacities in rest of the region. Also, pass through of some of the costs and as well as stockpiling of inventory. But granted, I think this is something to monitor. Good thing is that in the first half results, for the second quarter, the per month deferred revenue has come to about 34 million. So this is less than what has been guided. So that's a good thing. But clearly, I think this is something that is worth monitoring. And if the spillover impact comes in the subsequent quarters. Jarek?
Sure. And then, with a record order book of 31.2 billion, I mean, usually people remain bullish on the stock, but why are you more bearish on it, and why the downgrade on ST?
So I think it is more on a valuation call, and we're taking the view that this record order book is priced in. So before the results, ST was trading about 32 times forward earnings. And even after the correction, it is trading at about 27 times. If you look at the historical multiples, then it is about 19 times. So it is more of a valuation call. But we have mentioned that the company has the record order book, as you have mentioned, and as well as a strong record of execution. So hopefully, I think at a better entry points will be available sooner or later for the name.
Sure. Thank you so much, Krishna. So more on stretch valuations rather than the company's fundamentals being strong. All right. We'll move on to Amiru. Amiru, can you share why are you more having a trading buy on both Hong Kong and Namli Metals?
All right. Hi, Jarek. Hope you all can hear me. So let me share my screen. And thanks for having me on the show. All right. So let me show you this chart over here. All right. So first of all, before we go to our trading buy today, let's just take a quick look on the STI index, because the chart over here looks very interesting. So if you could see over here, the price is now testing its major resistance line multiple times already, currently at 4280, and with the advance this morning session, it could be that this breakout above this resistance line could be happening. And if this breakout happens, this could actually lead to a bullish continuation move, which means that its primary uptrend is well intact, right? And if this breakout happens, we could also see that the index is making a new all-time high soon. So that is why we remain bullish in the Straits Time Index. However, if we want to be careful with the index, maybe we can put our strong support line right around here for 160. So as long the index remains around the 4160 level, so the bullish buy remains intact. However, if the index breaks below this level, this could be like a double top breakout, and maybe it's time for the investors to actually restructure the portfolio. So given the bullish bias in the Straits Times Index, so we have two technical buy calls for today. So the first one will come from Namdi Metal. So this morning we made a technical buy call on Namdi Metal, and it managed to gap up and rose by almost 2.1%. So we could see that previously the price has been trading within a downtrend channel, in which we view this as more of a profit-taking stage rather than a bearish reversal. And renewed bullish momentum just came in last Friday, where price advanced by 4.4% and broke above this downtrend channel. And with this gap up over here, this really resembles a bullish flag formation, usually signifies a bullish continuation move. So our next technical target has been set at 0.520, in which we believe could be achieved, given that if you look at the MACD reading over here, it has stopped declining and now is flattening, which means that the bullish sentiment has returned. So we remain bullish on Namely Metal. Next, we also made a technical buy call on Hong Fok, where price also went up by 0.62% as of this morning session. So initially we made a technical buy call on Hong Fok as it just made a bullish reversal breakout last Friday, where price has been in a profit taking stage or pullback phase within this channel over here. So this channel is what we call a falling wedge pattern. And last Friday, it managed to break up this pattern with an increase or a spike in trading volume. So usually when this happens, this usually signifies a strong bullish reversal move, with price also managed to breach above this blue line over here, which is the 21-day EMA line. So this has pushed the price back above all its moving average line. And given the recent gap up from this morning session also, we believe that this bullish reversal move could actually remain intact, with as long price remain above this orange line over here, which is the 50-day EMA line, we believe that it could actually go higher and might test our next technical target at 0.865. So that's all for me. Jerry, over back to you.
Thank you so much, Amirul. Thanks for coming on the show. And then next, we'll move on to SingPost as well as Polo Marine. We'll start first with SingPost on why the downgrade. So I think, a lot of catalysts has happened. I think you have seen since our initiation, SingPost actually sold a lot of businesses, the Australia business, even some shop houses, as well as even their freight holding business as well. So we do think that a lot of these business that are supposed to be sold have been sold already. They have also declared a special dividend of 9 cents, which has been already returned to investors and has been factored into the price. So next, after our recent earnings call, basically we realized that management seems to be still looking for another business to grow into, especially in Singapore and other countries. So this may be a repeat of the Australia business again, but they are currently setting up they're still undergoing their strategy after the board renewal. So it depends on what the strategy is. But previously, a SingPost Center was known as a non-core asset, and we thought that they will likely actually sell it off. But our recent call with the management seems to imply that they want to wait and see what the strategy is, and they also want to rely on the rental income for SingPost Center, that it brings the rental income to sustain the business for now. So there may not be any immediate plans to put SingPost Center for sale, and that is actually a big chunk of our valuation, because 1 to 1.2 billion of our valuation comes from SingPost Center. And with the lack of catalysts going ahead, now that most of the business are sold, and they are still looking for a new CEO, and if they are not selling SingPost Center, we do think that there will be a lack of catalyst. Valuations by earnings will not be enough. If you look at valuations, I think they are trading at about 100 over times PE, where clearly it will take a lot of time for them to turn around the Singapore operations or even to grow into a new business. So as a result, we do think that investors is better to look into other stocks instead, and we downgrade to a whole, and we also put a 20% discount to our RNAV as a TP, because they are not actually now selling SingPost Center. So we do not think that they will sell SingPost Center anytime soon. So that's for SingPost. Next, we'll move on to Polo Marine. Basically, we do think that the worst is over for Polo. Last quarter showed improvement Q on Q. It is still weaker year on year, but Q on Q we do expect it to continue to improve, especially in the fourth quarter. Third quarter usually is the strongest quarter for the season, but we do think that fourth quarter could potentially be stronger, or maybe could potentially be as strong or maybe even stronger than the third quarter, which is the first time that they have done so. And we do think that utilization will likely pick up. Next, charter rates are continuing to hold and will likely rise slowly as well. And we do see signs of that already improving Q on Q. So net wise, we do think that there should be a lot of catalysts coming ahead for Marco Polo. We also expect them to secure longer term charters for some of their vessels. And the CSOV has been operationally fine with not much hiccups. And going forward, we do think that the pockets of space between charters will likely be reduced with these long-term charters. So all in all, we expect 2026 to be a much stronger year for them, and 4Q25 to be actually stronger or as strong as 3Q25. And that actually signals that I would say most of the bad news is over. The worst, I would say the financial performance will also continue to increase going forward, and that should be good for the stock price. Lastly, we also think that it's a very big discount to its RNAV. So if you look at Bengkong Marine, which we cover as well, they sold their Batam factory previously at a certain price. If you were to use that price to value the shipyard of Marco Polo, it could be potentially worth 120 to 150 million, depending on the range that you use. But Marco Polo is only booking the shipyard at 17 million in their books because of the previously restructuring exercise, and they actually kitchen sink all their assets. And net, we calculated that their net asset value, RNAV, could actually be worth up to 9 to 10 cents, based on today's current vessel price and the Batam land price for today. So Marco Polo is still trading at a very deep discount to that. And we do also expect more catalysts coming forward, like the Taiwanese listing for its Taiwan business, which could potentially happen next year because they will need at least half year or 1 full year of CSOV earnings for them to list at a better valuations in Taiwan. So net, we do think there's a lot of catalysts coming ahead for Marco Polo, and we're actually maintaining a buy at a higher target price of 9 cents as compared to 7 cents previously. So that's all for today. Thanks for coming on the show, and we'll see you next Monday.